What's up, everyone? Anthony Anderson here, co-founder of Elite Resource Team. And in today's video, I want to talk about 8 things financial advisors and insurance agents and accountants should know about working with one another. So you can see in the background here, I have just been reviewing some of the comments that people are making on our Facebook page, our ads, on some of our YouTube videos, on some of our Instagram posts. And it's so frustrating because financial advisors and insurance agents, they don't understand accountants. And as a result, they say things like, well, I tried to work with accountants, but they're all deal killers, or they're all arrogant, or they all say they're too busy and all they're doing is unimportant things. And I then read the posts from the accountants and the CPAs, and they're saying, yeah, I get approached from financial advisors or insurance agents all the time. All they're interested in is making money off my clients. All they're interested in is trying to sell things and push things down clients' throats. The problem is nobody is actually understanding one another. Now, granted, there are a few professionals, and maybe there's a few too many out there that do fit those descriptions. There's probably some accountants that are focused on just saying no to what they don't understand, a deal killer, or maybe they're arrogant. But that's not the majority of professionals. And yes, I'm sure there are. I know there are. I've met them. I've been in the industry since 2001. I know there are financial advisors and insurance agents that are only focused on one thing. How much money do I make? How do I close this deal? How do I sell something? But that's also not the majority of the industry. So the problem is with a lot of the discussion that I'm seeing going on in the community and in the industries, we don't speak each other's languages. We don't understand where the other person is coming from. So what I wanted to do in today's video is talk a little bit about that. I want to take a few minutes. Financial advisors and insurance agents. I'm going to give you a quiz, 8 things you should know about accountants and the accounting industry. And then accountants, I'm going to give you a quiz, 8 things you should know about the financial advisors in the insurance industry. And then for those of you that are either interested in working together or already are working together, you're playing nicely in the same sandbox. You're coming together to work proactively to help clients with more comprehensive advice. I've got 6 questions for you to make sure you understand about your partner. All right, so let's dive into it. We're going to start this little session on the advisors and accountants, 8 things you should know about each other. I'm going to start by making a suggestion. Get out a sheet of paper such as this and answer these questions. First, to the advisors and the insurance agents. And in fact, if you're a CPA and EA, some accountant on the line, go ahead and answer these as well. I assume you're going to know all of these, but it would be fun just to see your answers. And the financial advisors and insurance agents, hopefully you know most of these. Some of these you might not. I'm going to start real easy, because today is October 15th. So the question is, what is the 10-15 deadline? What is the 10-15 deadline? And if you need more time, you can pause in between these, but I don't want to go too slow in the video here. Second question, what is the 4-15 deadline? What is April 15th? What is a 10-40? Advisors and agents, what is a 10-40? What is an 11-20? What is an 11-20? What's that referring to? What does GAAP stand for? GAAP. What does GAAP stand for? What is accrual basis accounting? What is cash basis accounting? Very good questions. Very good questions. And just as business owners, we should know this too. And finally, getting into a little bit more nitty gritty here in 2018, TICJA, Tax Cuts Job Act, or Trump's tax plan, changed the standard deduction for an individual from blank to blank. From what amount? From blank to blank, 2018. I'm going to talk a little bit about why that is significant when I give you answers here in a second. All right, so the first answer, what is the 10-15 deadline? It's the extension deadline. What is the 4-15 deadline? It's the individual tax return deadline. So individual tax returns are due on 4-15 unless they file an extension, in which case they're due on October 15th. So as a warning to you as a financial advisor and insurance agent, if you are trying to develop a relationship with a CPA, is not very sensitive to be knocking on their door on April 5th, April 10th, October 12th, October 11th, it's slammed. They're going to be working oftentimes weekends, long hours. Be sensitive to that. If you want to be sensitive to that and still develop the relationship, we really encourage in our training something that most of you are probably familiar with called Tax Season Survival Kit. Very nice way to make an initial touch. What is a 1040? A 1040 is used, it's a form that's used for a personal tax return. That's the key thing you want to understand there. Personal tax return compared to an 1120, which is a form used for a corporate tax return. So if you hear a CPA reference the number of 1120s they receive or do, that gives you an indication on how many business owners they work with. Versus 1040s gives you an indication on how many personal tax returns they do. As a rule of thumb, if you are an advisor or an agent looking to work with an accountant, the more business owners, the more moving pieces. The more moving pieces, the more complexity. The more complexity, the more opportunity we have to deliver value. Therefore, the more 1120s they're working on, probably the more opportunity there is for us to work synergistically in a partnership with one another. All right, what does GAAP stand for? GAAP, Generally Accepted Accounting Principles, not the clothing company. What is accrual basis accounting? It's a way of recording revenue and expenses when it's earned. So the key thing here is to think about when you close a deal, right? If you are using accrual basis accounting, you're going to record the revenue and the expenses when they are earned or when they're incurred versus cash basis accounting, which is more of a common form of accounting, especially with small and medium-sized businesses. It's recording revenue and expenses when it's received. So it doesn't matter when you close the deal. It matters when the cash hit the account, right? It matters when the cash hit the account. Finally, 2018, TICJA changed the standard deduction from $6,500 to $12,000 for individual filers. Why is that relevant? Actually, I recorded another blog video or vlog on this on our YouTube that you can take a look at if you haven't seen that. It's actually, I think, quite insightful. But it talks about why the Tax Cuts and Jobs Act, or Trump's tax plan, killed your tax business. And if you're not an accountant, still relevant, why it is shaking up the tax business. Because what it did, not to spoil that video, but it significantly reduced the number of individuals who are itemizing their deductions. In fact, it was over a 60% reduction that first year alone. Why is that relevant? It's relevant because it affects the relationship that a CPA will have with their client or an EA will have with their client. The less itemized returns that are being filed, the less value I can bring to a client. There's just less moving pieces. There's less going on. Therefore, the more likely an accountant is to lose a client if all they are doing is filing their tax returns, because it's much easier, well, much less expensive at least, to go to somewhere like an H&R Block or Quicken and do taxes for a fraction of the price it would cost to pay a CPA to do them. So unless you're bringing value in some additional way other than just filing the return, you are, thanks to Trump, losing clients. And that's not a political statement. It is numbers. 63% reduction. It was tens of millions of households went from itemizing their deductions to doing a standard deduction. All right, so that's enough about that. Now let's move on to the accountants. The accountants that might be watching this. The enrolled agents, the tax preparers, the CPAs, I'm speaking to you. What does AUM stand for? You're going to hear a lot of financial advisors use that term, AUM. What's it stand for? What is an IUL? What's an IUL? How is a financial advisor typically paid on AUM? Can a client borrow money to pay insurance? And again, if I'm going too quick, just go ahead and pause the video. Can a client borrow money to pay for insurance? And you know what? Advisors and insurance agents, you should be answering these questions too. Hopefully you're getting 100% so far. Is a fixed indexed annuity a security? That's an interesting question. What is the difference between an IMO, a BD, and an RIA? Can a client take a loan from an insurance policy? And finally, what is an ETF? What is an ETF? All right, first question, answer to that. What does AUM stand for? Assets under management. So AUM is just an abbreviation for that. You're going to hear a lot of financial advisors who are what's called Series 65 licensed refer to their size of their business or their book of business based on AUM. So I manage 10 million of AUM. I manage 50 million of AUM. I manage 250 million of AUM. I manage $1 billion of AUM. That refers to how much assets under management they have. What is an IUL? An IUL is an indexed universal life policy. It's a type of permanent life insurance. How is a financial advisor typically paid on AUM? They are typically either paid a fee on the amount of total assets under management or some type of flat fee that includes advice and planning. So an example on a fee of total assets under management, maybe an advisor charges 1.5% on the total AUM that they have under management. Now that 1.5% is spliced and diced between a number of different parties, sometimes different money managers, sometimes custodian fees, sometimes RIA fees. But it's not uncommon, let's say if an advisor in total is charging a client 1.5%, maybe that advisor is actually taking home, we'll say 75 basis points or bips to 100 basis points or bips. That means out of the 1.5% being charged, maybe they're actually taking home 0.75% up to 1%, right? And a flat fee, sometimes advisors are charging just a flat fee. They'll say, regardless of how much assets under management you have with me, my annual fee, which includes advice and planning, is 20 grand, 30 grand, 50 grand, depends on how sophisticated the advisor, how large the clients, etc. Next question, can a client borrow money to pay insurance premiums? This is an interesting one. Yes is the answer when it's done in what's called premium financing. A lot of people are familiar with premium financing. It's just an alternative way to finance a life insurance policy. Typically, clients do have to have some type of minimum net worth. You're going to see, I mean, there's companies that will do it for less than this, but at least $1 million net worth, sometimes 3 to 5 million net worth. And you do have to inform the insurance company up front that you're going to be financing the premiums because it does affect how many policies stay on the books. But the short answer is yes, you can finance the premiums. You can also do something called premium funded, which is typically done for an even larger net worth where you're not actually borrowing the money, but you're funding the premiums, often in a bond offering. A little bit more of an advanced strategy, but also a good strategy to be aware of. Is a fixed indexed annuity a security? No, it's not. There was quite a bit of talk over this over the last 10 years, I think prompted initially by the market recession or downturn of 2008-9. And the short answer is no, it is still not a security. So as of now, you just need an insurance license to sell a fixed indexed annuity, even though it has some characteristics that people think mirror an index or should be a security. What is the difference between an IMO, a BD, and an RIA? So here's the key thing to think about. An IMO stands for an insurance marketing organization. That's insurance. An IMO typically is kind of a middleman between an insurance carrier and an insurance agent. They typically will help service the agent, right? So IMO, think insurance. BD stands for broker-dealer. Much like the name suggests, broker or dealer, we're brokering, we're dealing, we're buying, we're selling securities, and we're receiving a commission for buying and selling securities on behalf of a client. An RIA is different. An RIA does not get a commission on buying and selling, but rather they're taking a fee, as I said earlier, on the assets under management, or they're charging for the advice. Now, here's something that most financial advisors and insurance agents will get wrong, in addition to accountants. Is an RIA an individual? And the answer is no. An RIA, even though registered investment advisor sounds like an individual person, it's a company, okay? I know a lot of advisors are confused by this because one time I had an ad on Facebook that said something like, I own an RIA and I will tell you blah, blah, blah. And man, the hate I got on that comment. People said, you can't own a person. This isn't slavery. So here's the difference. An RIA is a company, a registered investment advisor. An IAR is an individual. IAR stands for Investment Advisory Representative. So an IAR works at an RIA, but the IAR is the individual, the RIA is the company, okay? 7, can a client take a loan from an insurance policy? Yes, they can. In fact, as long as it's a permanent policy, there's cash value, right? We're not talking about term policies here. We're talking about permanent insurance, whole life, IUL, UL. In fact, not only can you take a loan from a permanent policy, there's a whole niche study around this, typically using whole life. That's called, well, there's the bank, infinite banking, there's the bank on yourself group. But the idea here is you can actually build up cash value inside of your life insurance. You can borrow from it, make another purchase, then pay the insurance policy back over time. Now, what happens if the individual dies while there is still a loan on that policy? That's a good question. What happens? Well, the carrier that issued the loan gets paid back first, and then the beneficiary gets any amount left over. All right. What is an ETF? ETF stands for Exchange Traded Fund. These are all the hot rave. They have become incredibly effective, mostly because they are a very inexpensive way for a client to participate in investments. And are they the same thing as mutual funds? No, they are not. They are different. There are a number of differences between ETFs and mutual funds. You really kind of need to get into the minutia, which I'm not going to on this video, although I'd be happy to if anybody wants me to on a future video. Just let me know in the comment section. But they are different. ETFs and mutual funds are, in fact, different vehicles. All right, now partnerships. Those are for those of you who are either actively and proactively going out and looking to form partnerships, whether you're a financial advisor or an agent looking to form a partnership with an accountant, or an accountant looking to form a partnership with an agent or a financial advisor. And yes, there are lots of CPAs that are proactively looking for partnerships. In fact, our office probably gets 1 to sometimes up to 2 requests a week from CPAs that reach out to us and ask for introductions to financial advisors. But for the most part, it is lopsided. It is the majority of financial advisors and insurance agents out there looking for partnerships with CPAs. Regardless, if you're looking or you already have a partner, here are 7 good questions to make sure you understand about your partner. You need to really take the time to learn. Who is your partner's ideal client, right? Is it the retiree? Is it the young couple? Is it the W-2 employee? Is it the high net worth individual? Is it the baby boomer? Is it the small business owner? Is it the business owner that's doing 3 to 10 million of revenue per year, right? So who is your partner's ideal client? And if you can dive down even deeper into any specific niche, all the better. So if we're talking about business owners that are doing 3 to 10 million a year, is that any business? Or is that restaurant owners? Is that network marketers? Is that people in the hemp business? Is there any specific niche within that business owner community? So who's your partner's ideal client? How is your partner currently getting new clients? And dive in deeper in this one too. Not just how are they currently getting new clients, but how are they currently getting their A clients? How are they getting the very best clients? Are they from introductions from other financial advisors and insurance agents? Are they from introductions from new clients? Are they from marketing, etc.? How many business owner clients does your partner serve? Let's say I have 500 clients. Is that exciting? I don't know. What's that 500 clients made up of? I personally really like working with small and medium-sized business owners. A lot of moving pieces. I can bring a lot of value to that community. So if I'm looking at partnering with a CPA and they tell me they have 500 clients, I'm not going to get excited until I know what the breakdown of that client base is. I'd much prefer to partner with a CPA that has 100 business owner clients than 500 W-2 employees. Not that there's anything wrong with W-2 employees, it's just the area of expertise I have is much more valuable with that 100 business owner clientele. What does your partner perceive as their biggest challenge in their business? Really good question. Now, this one you have to kind of dig in a little bit because most people haven't even thought, what is my biggest challenge? But it's a very good question. So what do they perceive as their biggest challenge? Not to spill the beans, but let me give you a little insight. We have met with over 2,000 financial advisors and insurance agents over the last 9 years. The last 5 years under Elite Resource Team, and I was still doing some coaching before that. So I know the financial advisor and insurance agent community very well. Likewise, we've met with hundreds of accountants. So I've gotten to know that community pretty well. What does each group perceive as their biggest challenge? Financial advisors and insurance agents, 75% of them will say, my biggest challenge is getting more clients and effective marketing. CPAs, 75% of them will say, my biggest challenge, if not more, my biggest challenge is time. My biggest challenge is time. My biggest challenge is not having enough of the right clients, having enough time to proactively and holistically service my clients. So therein obviously lies one of the beauties of the partnership, right? You have financial advisors and insurance agents. As long as they are appropriately trained, they can come alongside a CPA who has enough clients, but not enough time. And the two of you can actually work well together in the same sandbox, provide proactive and holistic planning to kind of take advantage of each other's strengths while helping each other with your weaknesses, which is obviously at the heart of a beautiful relationship. Synergy has to be a win-win relationship, or a relationship isn't going to last. Where would they like to see their business in the next 24 months? Very good question. How many clients would you like to have? More? Less? What revenue would you like to have? Gross? Net? How many employees would you like to have? Work virtual? Have an office? Where would you like to see your business in 24 months? So what you see in these questions so far is, where is your business currently? Meaning, where are you getting clients? How many business owners do you serve? What's your ideal client? So that's where are you currently? What do you perceive to be your biggest challenge? And then where are you trying to go in the next 24 months? What does that look like? Where are you now? Point A. Where are you trying to get to? Point B. What's your biggest challenge in getting there? The line between A and B. Now, the honest conversation we should be having is, can we together help us over the next 24 months and on get to where we're trying to get our business to go? If we can't, and primarily financial advisors and insurance agents, don't try to sell the CPA on your ability to offer their clients new products if that's not where they're trying to get their business in the next 24 months. First, you need to understand where they're trying to go. Second, you need to understand why they're having a challenge getting there. And then you need to ask the question, can I help? If the answer is yes, then let's explore that synergistic win-win relationship. If the answer is no, shake hands and call it a day. All right, next question. Does my partner know how they get paid in our relationship? It's important. It's kind of like dating. You're going on some great dates, right? But you're both at the age where you're thinking, I'd like to know, does this individual want to settle down and have a family sometime? How many dates are you going to go on until you have that question? It's kind of like that. How are we going to get paid in our relationship? No, it's not the most important thing. The most important thing is delivering more value to clients, solving client problem, helping the community. But we, as far as I know, at least I'll speak for myself, are not in business to not make money. Money is a very important aspect of running a business. It's the gas that keeps the car going. So you have to have revenue in order to accomplish any of your future goals. So we have to have the conversation. How do we get paid in this relationship, right? One of our partners, John Cutton, he advisor out of New Jersey, Barron's Top 100 advisor. In fact, is getting inducted into the Barron's Top 100 Hall of Fame for being in the top 100 for 10 years in a row. Manages just shy of $2 billion of assets under management. Does an incredible amount of insurance per year, 20 to 30 million of annuities, and over 1 million of target premium. Incredible amount of business. He has this great saying, it's not about the money, it's not about the money until it's about the money. Point of that is, again, it's not the first thing. We shouldn't lead with that, but at some point, it becomes about the money. This tree has to produce fruit in order for it to be lasting. And the last question, what is their favorite animal? A little bit of a joke question, but the point, it has a point. The point is this, you need to get to know the other individual, right? We can't just have a relationship where we think we're like sharing a name and a phone number with each other 3 times a year. That does neither of us any good. We have to take the time to get to know each other's businesses, to get to know one another. What sports do we like? What hobbies do we have? Do we have a family? What's important to us? What do we value? And make sure those are in line with what you value. Now, obviously, you don't have to see eye to eye in politics or in religion. You don't have to be the same age or the same gender or the same ethnicity, but you should get to know each other. You should respect one another. One person might like dogs, another person might like cats. Doesn't mean we can't work together, but I should get to know you, because at the end of the day, the only thing that keeps business relationships together is trust and value. Doesn't matter how good you are, regardless of whether you're an advisor or an accountant, doesn't matter how good you are. Things always go wrong in business, right? Client doesn't get a form completed in time. Client gets declined through underwriting. The stock market goes down. These things happen. So you have to build a relationship in order for it to last. Otherwise, the first time someone says boo, the two of you split the other direction. You got to build a relationship. It's kind of like a friendship or a marriage. It doesn't matter how good your marriage is, right? We all go through those times where we're pulling out our hair because we're so angry at our partner. You have to have the relational collateral there. Find out what their favorite animal is and all the other things that are important. All right, so that's it. How did you do? I'd love to know. Advisors and agents, how many accountant questions did you get right? And did you get 100% of your questions right? And accountants, how did you do? Let us know. Make any posts in below this video here. Love to know how you did. Also, these blog videos, I try to record once a week, just hopefully helpful content and information. So what would be helpful for you to hear? I'd love to hear from you. Any topics you want me to cover? In the past, I've covered things, as I said, like Tax Cuts and Jobs Act, like how to share and commission, like what licenses to have, like how to set up your office space. But I'd love to know, what other topics would you like me to tackle? Also, if you like this video, take a second to like it, please. Actually like it on YouTube, and also subscribe to our YouTube channel. It is free. You'll get notified each time we record a new video and upload that. As I said, I try to do these about once a week. What else? Share it with friends and family. As always, we appreciate sharing these videos. They're free. Feel free to copy and paste that link, post it in your social media, share with friends, especially if it's a potential partner of yours. All right, that's it for today. Talk to everybody again soon.